Hi, this is Bob Iaccino talking gold futures from the CME Group trading floor in Chicago. Gold reached a 6-week low today, pushed down by the GDP numbers, which I'll talk about in a minute, but actually finished mildly higher. We got quite a rally in toward the end of the day, although we didn't get as high as gold bugs would have wanted. Gold longs are not really loving the price action over the last couple of days. Now, this was a dollar-driven move. For lack of geopolitical action, the dollar is what pushes gold in either direction, as we don't really get a ton of supply and demand changes in gold. So the dollar rallied along with yields on the U.S. Treasuries. Both of those rallied after the release of the GDP figures this morning. We had jobless claims earlier than that, and jobless claims were a little higher, but again, attributed to the hurricanes, as you know, job losses came with the storm. But GDP, on the other hand, came out at 3.1%. It was expected at 3%. The PCE, the consumption portion of GDP, came out unchanged. It was not lower. So this put a lot of credence into the words that the Fed have been saying. Fed speakers, including Rosengren today, continue to reiterate, short of the couple of doves like Evans and to a certain degree Bullard, continue to reiterate that rate hikes are appropriate in a gradual manner. And Rosengren even suggested yesterday and today that a little bit more aggressive wouldn't be the worst thing given stronger growth. And that's what we got out of the GDP today. We got a 0.1% higher revision than was expected. This was the final look at this quarter's GDP. So that as the final number, we did final numbers 3.1%. Dollar rallied and the yields rallied, and then they came off in toward the end of the day, and gold rallied as well, as I mentioned, finishing mildly higher. Now, this is the second day in a row that we have finished below support. Now, support, a lot of people think is 1,300. Technically speaking, it's not. It's closer to 1,296, 1,297, 1,300 being a psychological level. That 1,296, 97 level was the breakout level higher. It was resistance for weeks at a time. We broke out, rallied all the way up into the 1360s, and then came back off, and now we're below support for 2 days. What I don't like about the chart pattern is the close below, and then the rally up and the failure to get back above. Doesn't have to be a one-day thing. If we rally up tomorrow and close above support, you'll probably see another leg higher. But right now, that support is resistance, but we've closed below it. That's what makes it resistance. So the close below support, troubling for the gold longs. This is Bob Iaccino talking gold futures from the CME Group trading floor in Chicago.